exactly does KRA count as taxable income in Kenya? Whether you are in formal employment, running a side hustle, or receiving money from abroad, this guide will break it down. So why does this matter? KRA doesn't just tax salaries. They tax income, and that includes a wide range of sources. Knowing what qualifies as income can help you stay compliant and avoid penalties. So what is taxable income? In simple terms, taxable income is any income you earn in cash or kind that increases your wealth. Under Kenyan law, that includes both local and foreign income if you are a tax resident. So here are the most common types of income that KRA considers taxable. We have employment income that includes salaries, wages, bonuses, and benefits like housing or car allowance. Then we have business income, the profits from sole proprietorship or partnership. Rental income, that is from residential or commercial properties. Professional or consulting fees, commission or royalties. Investment income, that is interest, dividends, capital gains. Then foreign income, if you are a tax resident in Kenya. What about gifts and Mpesa? Personal gifts or occasional cash from friends and family aren't usually taxed unless they become frequent or business-like. But if you receive money through Mpesa regularly for business, KRA can flag it as income. So record and explain your inflows clearly. So KRA can usually check your data from banks, Mpesa, PayPal, and more. If your lifestyle or account activity doesn't match your declared income, they may investigate. That is why it is important to understand what counts as taxable income. So final tips, keep simple records on all your income, declare all business and rental earnings, understand your tax obligations, especially if you earn from abroad, ask for help if you are unsure. So now you know, taxable income isn't just your salary. If money is flowing in, KRA may want a share. Hit that subscribe button for more simplified tax tips that help you stay on the safe side.